All right, to this week we are discussing how you can create the perfect trading plan for you to succeed this year. So today we're going to discuss the important factors that you should consider when you're creating your trading plan, and we are starting with self-assessment. So I have written down the key points that we are going to talk about. They should tell you everything that you need to understand and to watch out for when you're creating your trading plan. So the first thing, we all have to understand that your goals are outlined. You need to identify your goals and you need to write them down so that you know what you're targeting and what you're working towards. All right. Then we need to consider risk. We have always talked about risk. Risk is very important. You need to understand what type of risk you are looking for. Now, when you're using risk is also in line with what type of a trade are you looking for. All right. So, for example, if I am looking to take a scalp trade, right? You are looking, let's say we are looking to buy here. We are saying price has been, it gave us an impulse. It's been consolidating. And then we're looking to buy for it to go higher. Let's say since the scalp trade, let's say we're looking for a weak fill. All right. So if we are looking for a weak fill, that means we can say, since price has given us a rejection right there, and we have an upward movement, and then we have a bearish candle, we can look that as our retest. That means we're looking to enter right here. So since this is a scalp trade, you are looking to use very little risk. All right. You want your stop loss to be tight and you want your TP to be well defined. All right. So our target is our weak fill. And then let's say we have entered right here. All right. So where are you going to put your stop loss? Just a few pips below. All right. Because if price is to close below this area, this support right here, then price has broken out of our formation. And since you're a scalp trader, it technically does not align with your goals unless if you want to use more risk, and we are saying your risk should always be identified. All right. If you are looking to take a bigger trade, since we're saying price is give us an impulse, we could look at this as a correction. And if you use your trend line, you can look at that, and then this becomes your higher lows. So if those are your higher lows, that means you're expecting price to continue going higher. So what does that mean? You can enter here and you can put your stop loss just below your low. All right. And that can push price to go higher in the direction that you need it to. All right. That's an understandable risk because you are aiming for more than you are aiming to lose if things go wrong. All right. Now, time horizon. Time horizon, deciding how long you plan to hold on positions. That's what we just discussed with risk tolerance. All right. Now, also another thing that I need you to understand on time is you need to understand what session you are trading. All right. Now, sessions differ. You have New York, you have Asian, you have London session. Now, each of those share sessions are there to help each other out. So you need to understand sessions for you to be able to use them to your advantage. All right. So there are going to be key things that you take on from the Asian session, and then you use them in the London session, and then you can use them in the New York session. If you are coming to trade one session at a time, then you are looking at what has happened in the sessions before, and then you use that information to your advantage. All right. Trading style, like I said, it's important to understand what type of trade you are looking for. Are you entering the market as a scalp trader? Are you entering the market as a swing trader? Are you entering the market as a day trader? Now remember, a scalp trader, you are looking for a quick trade. A day trader, it can last the whole session, and then a swing trader can go overnight, weeks, months, however you like. All right. And then skills and knowledge. Skills and knowledge, that's you gathering all the information that you need to trade. All right, you need to gather information about how much you understand the markets, what type of tools you're going to use. We don't use any indicators. All right, we don't use any sort of tools. The most tools that we could use maybe is a Fibonacci, the Fibonacci tool. Otherwise, we don't use any indicators, right? You need to understand your risk management, and you need to understand gaps. Gaps and wicks are very important. Your risk management is very important. And your understanding of the markets is very important, as we do not use indicators. So you need to understand candlesticks. Candlesticks is our tool. That's all we need. We need candlestick and your general knowledge of what's happening in the markets. All right. Okay. Now, should we go through that again so that we can understand what we are talking about?